Hello and welcome. I'm Maloni Bhatt. India is poised to be a $1 trillion digital economy and could support 60 to 65 million digitally enabled jobs by 2025-26, as per the country's Ministry for Electronics and Information Technology. India's digital consumer base is the second largest in the world, and it is rapidly growing. This technology ecosystem and the economy represents a huge opportunity for investors. So, what is the outlook for this digital economy and what sort of giants could emerge from it? I have with me veteran entrepreneur and investor Sanjeev Bikhchandani, the founder and executive vice chairman of InfoEdge. He looks after the investment arm of the company. InfoEdge is behind several successful internet brands, including Naukri.com, Jeevansathi.com, 99acres.com, and others. Sanjeev co-founded and funded Ashoka University, a liberal arts institution. He's been involved in the startup sector for over 3 decades. In 2021, he was awarded the Padma Shri, among India's highest civilian awards, for his contribution to trade and industry. Sanjeev Bikhchandani, very good to have you with us here today.
Thank you so much for inviting me, Miloni. And I'm glad to be here.
Before we begin, this conversation is part of Mama India, the Digital Bharat 2.0 by AppsFlyer. The focus of Mama India is on growing India apps economy and how businesses can leverage the opportunities in an increasingly mobile-first world. Sanjeev, to start, when you started Naukri.com in 1997, was it? It was part of the new age businesses then, right? Like part of the dot-com boom. The word startup did not exist. Entrepreneurship was celebrated, but not thought of as viable for middle-class India. And over the years, as a businessman, investor, mentor, you've seen the ecosystem evolve. We now have a startup landscape that's being noticed globally. If you have to talk of the big picture, what excites you in terms of trends in this ecosystem? And where do you see the opportunities and the challenges?
So it's a very, very different landscape. I became an entrepreneur in 1990. For 7 years, I drifted and did a whole bunch of small things. And then we launched Naukri as one more small idea. When we launched Naukri, there were only 14,000 internet accounts in the country. So it was just a nifty small idea. We had no clue that the internet would become big, that this would be a huge opportunity. That it's just one more small thing I was doing. I was pottering around. I was drifting. I was experimenting with my career. Yeah, but right place, right time, worked hard, worked smart, internet took off, venture capital happened, we got lucky, and we are where we are today, right? But, if I look at the landscape, I think the first and biggest thing is that there are many, many more young people trying entrepreneurship, wanting to become entrepreneurs, than there were in 1990 when I quit my job. So you had entrepreneurship by family, by caste, by inheritance, right, in those days, or perhaps out of no choice. You couldn't get a good job, so you tried your hand in entrepreneurship, right? We didn't call it entrepreneurship. We called it starting a business. The term entrepreneur came into vogue much later, right? Now, we, so today, so middle-class India was in the habit of training its and schooling its youngsters to be risk-averse, to study hard, and to get good jobs by clearing some entrance exam or getting some degree of qualification, right? And then you get into a safe job, and then you're set for life. We weren't trained to take risks and become entrepreneurs, right? But today I see it as having gone mainstream. So middle-class India is the segment of population that contributes the most to student bodies in the elite institutions of India. Look at the IITs, look at the IIMs. Very often I go for talks, and I have often asked this question: how many of you describe yourself as being from middle-class families? Maybe 80 or 90% of the hands go up. Now, middle-class families means parents are salaried income, they are often in the government, maybe in defense, railways, police, academics, public sector insurance, public banks, those kind of families. Because middle-class India actually, flogs its kids to study hard. The parents tell their children, you have nothing, we have nothing to give
no
you
option
other than education.
Yeah.
Right? You will only make it on your education. So you study hard. And therefore, middle-class India has found its way to upward mobility. largely through India's elite education institutions, and then take up a job, either in the government or in the private sector, or as a CA, as a doctor, or whatever, right? Uh, so for somebody from middle class India to aspire to be a startup entrepreneur, bootstrap entrepreneur, no guarantee of any salary in the first few years, that trend is new, right? And for a middle class boy or girl to do a startup, it has now become socially acceptable in the families, right? I remember when I quit my job in 1990, I was working, I had 5 years experience in 2 multinational corporations from Ahmedabad. I quit my job and I got no salary for the next 3 years. And people were astounded. They thought I'd thrown away my career and there's something wrong with me, right? In the year 2000, just before we raised venture capital, right? I had been bootstrapping for 10 years. And for 6 of those 10 years, I had not taken a salary. Okay. And I was doing part-time jobs. I was visiting faculty here, visiting faculty while drifting and trying to do something in the company, right? And financially, I must have been the worst off person in my class at IIM Ahmedabad in those days, at that time. Subsequently, things changed, right? Today, you've got very bright young kids who, out of IITs, IIMs, the best institutions, wanting to do startups, right? And therefore, the quality of talent coming in to try and do startups is very different. When I look at those, the young people today who are starting out in their mid-20s, late 20s, first of all, they're much smarter than me, than I was in those days. Many of them, much, much smarter. Second, they are much more courageous in terms of the risks they will take as compared to the risks I was prepared to take. Number three is their vision, their ambition is audacious. Much more audacious than I was in those days, right? And because of this, some of them will end up doing very big things, and they already are. So quality of talent, number of people trying is one big thing. The other big thing is availability of risk capital, right? Up until 98 or 99, venture capital was just not available, right? I had vaguely heard of the term venture capital. I had never met a venture capitalist, and I had never met anybody who had been funded by a venture capitalist. But सुना था कि वेंचर कैपिटल नाम की कोई चीज होती है, बट मैंने कभी देखी नहीं थी, right? Now all that has changed. There are now angel networks, there are angel investors, there are friends and family rounds, there are seed investors, there are pre-seed investors, there are micro VC funds, there are VC funds, there are private equity series, B series, right up to pre-IPO, then IPO. So the whole ladder, there's lots and lots of capital. Of course, you got to be good enough to deserve that capital. It still doesn't grow on trees, but if you're good enough, maybe you'll get some, right? The funding environment has changed. The third really big thing has happened is that this government, I think, has understood the importance of startups in the Indian economy. Now, I finished college in 1984, right? I was 21. I began to work. And I look back at the first few years of my career, and I look at Indian industry now, there's been it's a sea change. And then I go granular, and I see, okay, which are the companies, industries, sectors that have really given the growth or driven the growth over the last 30, 35, 40 years? Right? These industries and these companies very often did not even exist or barely existed in 1984. Right? So look at IT services, barely existed. IT-enabled services did not exist. Internet did not exist. E-commerce did not exist. Private sector telephone line, telecom companies did not exist. Mobile telephony did not exist. Private sector airlines did not exist. Private sector insurance, private sector banks did not exist, right? And yet the buzz, the growth, the employment, the investment, all of that has come into many, many, many of these sectors and these companies. In 1980, Infosys was a startup. HCL was a startup. They're giant companies today. So the message is clear. The giants of tomorrow are probably startups today. And a lot of the growth will be driven by startups. And I think this government recognizes that. And I must commend this government that they have got an official program, Startup India. They have understood the importance of startups. And they also know that, look, it'll take 20 years, 30 years for these companies to become giants. They're not just thinking for today, they're thinking for the future, right? And that's a very good move by this government. So these three things I'd like to highlight. There are many more, but these three things I'd like to highlight. The fourth one actually very important also, which is India is now a much bigger market, right, than it was 35, 40 years ago. The fifth thing is, India has become digital. Mobile telephony, smartphones, feature phones, bandwidth, UPI stack, right? All of these are important landmarks for startup entrepreneurs, making it all possible.
But many companies are emerging. Many have grown exponentially and very rapidly with VC funding, by acquiring customers, and they're helping to create markets or fit their products into markets, which are, markets always evolving. So, what are your big lessons in building products that last and evolve as consumers change and evolve?
Well, I've always said that successful businesses are built on deep customer insights, right? You get product market very easily if you have understood your customer well, or your prospective customer well. That's a little story. So when I met Deepinder Goyal for the first time, founder of Zomato, it was 2010. So it was the company was then called Food eBay, right? When and I asked him, where did you get this idea from? Ye idea kahan se aaya? Right? And he told me a story. He said, I was working in Bain Consulting in Gurgaon, near Delhi. And it was an office where there were 50 or 60 people, mostly young, mostly male, mostly single, many living away from home, right? From other parts of India, right? What this meant was that they wouldn't bring lunch to office, right? Consulting hours are long. They would invariably end up having 2 meals a day in the office, lunch and dinner. Office had a cafeteria that would not serve food, but you could bring your own food and have it. To make life easy for the employees, the admin team had collated the delivery menu cards of maybe 80, 70 or 80 restaurants and put them in a file folder and kept it in the cafeteria. Right? You could refer to it, you could figure out what you want to eat, you could call up the restaurant, they deliver, you come back and when the food is delivered and you had your lunch or dinner. Right? Deepinder said, yeah, man, I come at 1 o'clock, I'm hungry, I've got deadlines, my boss is jumping on my head, I don't have time. And then I have to stand in line for 20 minutes to see this file. I see it for 30 seconds to make up my mind. I call up, food comes in 1 hour, I come back. It's a pain. So one weekend he came in to the office and scanned all these 80 menu cards and uploaded them on his own personal page on the office intranet. Right? And 2 days, the IT infra guy in the office came to him and said, man, what have you done? Why is 95% of internal traffic to your page? And he said, the penny dropped. I realized that it's not just my problem, it's everyone's problem. And aggregation of menu cards has value, right? And that's all he did. He went on weekends, aggregated, picked up menu cards, delivery menu cards of 800 restaurants over a couple of months, right? And he put them up on the internet and he called it Food eBay. And traffic began to come instantly. And that's how I discovered it. I was using the site. I loved it. There were many restaurant listing sites. This is the only one with all the menu cards. He had got that one insight, that aggregation of menu cards has got value. He got product market fit day one, right? Naukri was a similar story, which I won't go into because we may not have the time. But essentially, if you've got your idea from observing customers and prospective consumers, and you identified an unsolved problem, which you can then solve, it massively increases your chances of success. So focus on the customer, focus on the consumer, understand the unsolved problems, and go out and solve them. And hopefully you'll succeed.
You're an investor. You've made early investments in Zomato, Policy Bazaar, and many other investments. Currently, venture funding has slowed because of uncertain global economic outlook. Everyone is being battered by high inflation. There's geopolitical uncertainty, market volatility. Now, how do you see this period play out? And what is the kind of advice that you're giving companies you've invested in to ride out this phase?
So actually, there isn't a shortage of capital. It's just that investors are being very careful and discerning. There's enough money, but it's not that
It's not coming easy.
Yeah. You got to work hard. You got to think it through. You got to, if, as an investor, you evaluate your companies thoroughly, much more thoroughly than perhaps you did 2 years ago. The kind of herd mindset is over. Okay, each and every company is being evaluated very carefully, but investments are happening. So what this means is the pace will slow down. What it means is the frenzy is over. What it means is valuations are no longer that frothy. They are more modest. What it means is, as a founder, as an entrepreneur, you've got to be very clear about your value prop, your unit economics. You've got to do more with less. You've got to start talking revenue and profit and cash flow much earlier, and then executing on that plan. And all of those things. So it's back to basics of running a business. Right? It's capital efficiency is back in vogue. Right? You can't presume that you will get your next round. And if you don't, then how will you manage the money you have? Those are questions you need to ask.
So in this phase, then Sanjeev, how do you see this sort of play out? In a sense, do you think we're going to see a lot of mergers? Do you think a lot of companies which are not able to do the things that you say in terms of unit economics, grow sustainably, grow reasonably, manage expectations and stuff like that? How do you see them performing?
Look, there will be some mergers, there will be some downsizing, there will be some shutdowns. Many of the mergers may happen out of distress. All this is part of the game. Look, entrepreneurship is Darwinian, understand that. Right? Many try, few succeed. It's survival of the fittest, most adaptable, the ablest. Right? For a while, it didn't look like that because there was way too much capital in the market. But now, with investors being a lot more careful, it is back to survival of the fittest. Now, that is the unfortunate reality. And therefore, some will see pain, but some will actually grow and thrive. And that's life.
So, are there sectors that you continue to be bullish about? Which are the ones that are capturing your interest?
So I'll tell you. See, we invest in internet, B2B SaaS, tech, right? We don't do any non-tech, right? Second is we don't do it top-down. We do it bottom-up. So our team reviews, evaluates about 1,000 startups a quarter. We invest in 3 or 4, right? And it's all bottom-up. So, in 2008, if you told me, hey, why don't you look at the insurance comparison sector? There was no sector in India. Policy was the first one. We do it bottom up. We see, does this entrepreneur talk sense? Does it look like a good team? And the idea they're pursuing, does it have legs? Right? And if you come to a conclusion, then you go further and dig deeper, and then you figure out, right? We would never invest in Zomato and Policy. Our 2 best investments if I go on top down and say which sector. No, just meet which entrepreneur, which company, which team, right? And then see if you want to go behind them.
As an investor, as someone who's also an entrepreneur, watching someone build a company, how do you see your role as an investor?
So I think let's understand one thing, that nobody becomes an entrepreneur because they're looking for a new boss, right? And as an investor, and having been an entrepreneur, and I'm an entrepreneur, essentially at heart, you got to recognize that. वो उसकी dream है, उसकी vision है, right? If you buy into it and you buy into the person or the team, right? Then you go behind that person, behind the entrepreneur, behind the team, right? And then maybe you can help them a bit, but you cannot impose. You only can suggest, right? And the truth is, good entrepreneurs have huge self-belief. They are confident. They're headstrong. So you're lucky if they actually follow 2 out of 10 suggestions that you give. And you got to be willing to accept that. Right? वो उसका जीवन है, उसकी जिंदगी है, you're buying a piece of it. And you, as an investor, you cannot play God. You cannot be his boss or her boss. You have to have conversations. And hopefully, some stuff may rub off in those conversations.
What happens if you see them go down a path to ruin?
Well, look, if it's a bet the company kind of mistake, obviously you go in and you say, guys, this is wrong. They may or may not listen still. But, so for example, you were telling many of our founders a year back, before other people really got on that, listen, things have changed or things are going to change, right? Before the market corrected, I said, look, the market is changing. You got to assume this is the last round. Can you get to better unit economics and profit and be frugal? Many people didn't believe me because it was before all this happened, right? But slowly they began to believe and they came around. And it took maybe 2-3 months, and most have followed. And that puts our portfolio in reasonably good shape. So entrepreneurs are smart. I mean, the entrepreneurs we have backed are smart. They get it.
Sanjeev, thank you so very much for your thoughts and for giving us the time.
Thank you so much for inviting me. Pleasure talking to you. Thank you.